Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. First market we'll take a look at will be the Australian US dollar. I said earlier in the year that we were no longer interested in going after the short side from a longer term perspective, that if you do go after the short side, it would only be on a short-term basis, a day trade basis, and that's where I'm still at now. This market has, however, made a lower low, so Aussie still working itself out on the downside. We think there is a possibility, however, you'll see an intermediate term bottom right here at the 75 level. You can see I've marked that. As a trader, we certainly understand that market movement is data dependent, meaning it's dependent on the fundamental news of the day. And without a doubt, that's going to ebb and flow from week to week, month to month. But when you look at the Australia, I really think you have to think about the long-term fundamentals in place that don't change really, other than year to year, perhaps decade to decade. And that'd be demographics, which the Aussie definitely has in its favor. You have governance, you have rule of law, and position in the global marketplace. No doubt about it, Australia has them all. When you look at it from that perspective, long-term perspective, you pan out to a monthly chart, and it's not that hard to imagine that at some point over the next couple of years, there's a strong possibility that Aussie will carve out a long-term bottom, one that we'd be interested in as investors too, even longer-term investors. So at some point, that's what we'll be looking at. Back to the here and now on the daily chart, however, you can see traders will still be rewarded for selling rallies. Overall, we're not so much interested, as I said earlier in the year. Longer term on the short side, we think you're getting in an area here where you find value. But shorter term, you'd definitely be looking at both sides of the Aussie. Next market, dollar chief. I like this chart. It's pretty cut and dry. You can see dollar Swiss right on top of support there, just below 95 even. So we'll definitely be interested in buy signals at the 95 even level here, a little below there, I guess. We'll be scouting out this market on the lower time frame charts for buy signals in line with this overall bullish pattern now. So we see this more or less a correction here. On the other hand, if you don't respect the March low, if you don't get a double bottom in there, and you do not get a shift in momentum, prices continue to creep lower, then we'll back off of that. So give us a couple of closes below that critical 95 even level, and shorter term we'll switch to the other side. We'll switch as quick as we need to as far as going from buying dips to selling rallies. Next market, dollar index. Dollar index, similar to dollar Swiss, looking good. You're still above support. We're very definitely interested in buy signals at those lower levels here. You can see all kinds of support piling up there. Both sides of 96 even, so that's going to be interesting to watch. If you see a short-term shift in momentum, we'll definitely be about that. We'll be looking to position ourselves long in here. We talked about the week-to-week and month-to-month ebb and flow of fundamentals out there, and the story in the U.S. is you've had 3 months in a row of lower retail sales numbers, not lower than expected, lower retail sales numbers. So retail sales kind of backing up in the U.S. over 3 months. That would be a concern normally, but not so much right now because those slowdowns came January, February, the tail end of the winter, where seasonally you do have a slow time. The thing to remember right now about the U.S. economy is you just got into spring. You're just starting to see a pickup in retail activity. Sure, that economic number on Friday, the jobs number, non-farm payroll being lower than expected, that's a concern. No doubt about it, but one number is not going to make a trend. The trend in job growth is still higher. But what you have to focus on is what's just over the horizon. We think you're going to have a blowout quarter, a blowout second quarter, just as you had last year. Now, if you don't get that, if you don't see a significant pickup in retail sales in April now, sure, that would be a concern. But both short-term and long-term, we're still very much interested in buying dips in the dollar. And this is a dip right now, so we'll definitely take a good look at that 96.5 level to see if we start to see any shift in momentum higher, i.e. buy signals, and we'll go with those. Next market, the euro. We talked about longer term fundamentals, demographics. And when I look at the euro, I can't help but think, the demographics are decidedly against this market. You're not going to have the spring boom on the level that you're going to have in the U.S. because, you know what, there's just not enough young people out there. There's just, that's the way it is. And that's Europe's long-term weight to bear right now. However, on a short-term basis, I'll pull up my risk tolerance threshold ratio here, and here's how we make our determination. We take any 3 successive patterns and we just trade with the majority of those patterns, no questions asked. So as a short-term trader, if you're going to trade the 5 through 25, you're buying dips. I prefer to trade both the 5 through 25, and I'll trade the 10 through 50 too. So if you're trading the 10 through 50 here, you can see the 10 is up, but the 25 and 50 are down. You're still selling rallies on that time frame. On the other hand, shorter term, you're buying dips. So in other words, what does that mean for me? It means I'm trading both sides in the euro right now. So trading both sides in the euro right now. The thing that stands out to me is you have not had a short covering rally to date since this bear began last spring, right? So you haven't had a short covering in a rally in a year. I don't know if you're going to get one or not, but I know our indicators are telling us to trade both sides. I do know if for whatever reason you're a euro bull, you have to be pretty disappointed that you've had such a small short covering rally to date in there. So we're going to see what happens, but for our money, we're actually trading both sides on a short-term basis. Longer term, we're still selling rallies in the euro. Next market, gold. I see gold is similar to Europe. I think that the correlation is on there. I think you should have a tighter correlation to that. Both of them, they're in a situation where, yeah, short term, we'll play it from both sides. Intermediate term, long term, we're definitely still selling rallies here. We think there's more downside to go longer term, intermediate term in the gold market. Last market we're going to cover 10-year note futures. We saw the possibility of a nice sell setup in here. It didn't pan out. Again, markets are data driven, just like we are. You had a much worse than expected U.S. unemployment number. The 10-year note immediately jumped higher, jumped past the previous week's highs, so it looks like you're going to get another test of 131. Longer term, however, when you pop out to a weekly chart, we still see this as being a significant area on the chart to set up shorts. And if anything, it'd be exciting if the 10s can get up there to set up shorts against that significant resistance around 131 in the 10-year note, right at the same time that retail sales are picking up, that you're getting the big spending push that you always get come springtime in the U.S. Hey, we've got a gift for you today. There's a new ebook came out, 15 Ways to Improve Your Trading in 7 Minutes. I wrote chapter 3 of that book. It was a challenge because they said, hey, give us something that's really going to help people in a chapter or less. And I took that to heart. So go ahead. You can go ahead and download that for free. I wrote chapter 3. I'd love your feedback on it. There'll be a link for it just below today's video on YouTube. Hey, thank you so much. My name is Jay Norris. I teach trading at Trading University, and we look forward to seeing you next time.